Okay. You guys are saying yes, correct. I don't think there's anybody that said no. If there is anybody that objects, please let me know. We can address it. Okay. Everybody says the schematic says market structures to the downside. But if we want to focus on buys, we need to break structure, and we 9 out of 10 will go to the next structure. If we break, we will go to the next structure, and so forth and so on. Right? Okay, cool. No problem. So this is our structure here. This is the structure. This is the structure. Where's the play button? Okay, let's play. Let me go a bit faster. This is a time frame. Okay. So yeah, we've taken out a strong structure point. Now, guys, you don't need to say, I missed the buy because the buy was here. We don't need to say that, because we never knew this was going to hold, because market didn't break structure to the upside. However, if the market comes within this range here and gives like a retest, we can buy to the next structure. If the market breaks, we can buy, and so forth and so on. So yeah, don't ever feel bad that you never got the sniper. This is not a sniper buy per se, because it hasn't changed structure. So until structure has changed, we know we get the pullback and we're likely to buy the market. Okay. So the market's changed direction. What are we supposed to do? We know if the market has changed direction, we've broken structure, big structure to the upside. We can see as a double bottom, actually a triple bottom. So there's two things that's happening in this situation. There's two things that's happening in this situation. So again, we need to trade what we see. So we have to catch a buy on this area, on the retest. Okay, we have to catch a buy on the retest. Why? Because market structure was the upside. Boom, market broke. Had to come and retest and buy. Okay, we have to trade what we see. Now, before I carry on there, let's look at this market structure here. And this is where I took a big loss. Okay, low, higher low, lower low, and boom, we broke structure to the upside. So we anticipated when the market come. Let me make it like this. The market comes, it will give a bounce, and we should buy. So what did we do? We bought the market, and the market did not proceed to go to the upside. This is that time, I think last year, around about with CPI, when CPI was giving that 8,000 pip moves. So these are the moves that happen there. So again, market broke the upside, we have to buy. We have to buy, because structure says so. All right. Okay. I bought, hit a break even, I bought again, and then that thing just kept on tanking. The thing just kept on tanking. And yeah, I just let that account go, and I lost a lot of money. Again, market came back, retest, and we got back into the market. We made the money back. Now, the reason why I'm showing you guys this, we don't know if the market's going to hold and proceed to buy. But we do know, because of history, market must break and retest, and it's likely to buy here, and it's likely to go to the next high. And if it breaks, it will continue doing break and retest and so forth. So history has told us that's how market moves, right? So why? I think I was warning people, guys, don't sell now, just keep on buying. And I think I had on the Zoom with the students as well, guys. I don't care if this thing is ranging. I'm just trying to buy. I'm just trying to buy. Why? Because I want to get on the right side of the trend. Market is broken structure to the upside. You need to break, retest, and continue buying. So simple retail. We're not talking about imbalance, fair value gaps, all this liquidity grabs and all this bullshit. We're following structure first. Whenever you look at the market, you need to look at the structure. Again, guys, I might be a bit tonight, but we need to be honest with ourselves here when we're losing stupid trades. Like, I mean, like ridiculous trades. And again, I would see students in a cell. I would see people in a public group in a cell. Kudos to you. Quiet that you're catching sniper entries, but you're on the wrong side of the trend. So you in a cell, and I haven't taken a trade for a whole day. And here my buy come. And my buy is bigger than your sell. You got 1,000 pip sell, but I've got a buy of 5,000, 6,000. And I'm currently holding a buy now of 12,000. But now, who is right and who's wrong? You're not wrong. I'm not wrong. But I'm on the right side of the trend. There's a difference. So if you're in a sniper entry for a sell, I'm in a sniper entry for a buy, but we're both in profit. We're both not wrong, but I'm on the right side of the trend. Something is a fine line between that, guys. So yeah, let me not go on anymore about it. So we do know the market needs to give a pullback, and we want to buy the market there. Let's see what happens. Okay, now the seller comes, he sees the double top. Yes, the double top needs to happen for the pullback to happen, for the push to go to the upside. So the seller comes with the double top, he's in a sell. Fine, very nice. But he's hoping that the market's going to break to the downside. Okay, let's go. And the market continues going and going and going. So now, very, very interesting. Very, very interesting. Okay. Guys, we know about trend lines. We know about trend lines. We want to utilize trend lines as guidelines. Okay. So now, for the very, very first thing that we need to know, we got the buy. Okay. But now we want guidance. Okay. Number one, actually, let me do it like this. Should I write it down, guys? You guys going to jot it down and take a photo from your side? Yes, no? Or should I just keep on talking? What are you guys saying in the chat there? Yes. Okay, only one person wants it written down. Okay. Guys, I'm very vocal and verbal about how I want to convict what I'm saying, because I believe in what I say and I trust in what I say. So number one, okay, BOS happen. Okay, that's basically break of structure. Let's not look at smart money. Break of structure has happened, which means structure is broken to the upside, creating. Just put here higher highs and higher lows. Okay. Number three, we can locate our order block. I'm not gonna dive into that. Okay. I've been telling you guys, or some of you guys in your DMs, don't look at the order block as the grail of now. This is where I want to enter. Look at it first from a retail perspective. So what is retail? A structure broken? Yes. Okay. Structure is broken. That's retail. Okay. Then we know higher highs and higher lows has been formed. Now you look at locate your order block. Why do we want to locate the order block? Okay. We want to locate the order block because we're looking for direction. Order blocks gives us direction, right? We know that the market 9 out of 10 should go and reach there. Okay. Let me do it this way. Okay. So now we've got a direction. Now we want to pull trend lines, guidance. Remember, we don't need the trend line to enter. You can enter off the trend line in the zone, but obviously with candle confirmation and all those good things, but we want to use it more for guidance. So what would I do? I draw a trend line from the bottom. I like to go sometimes from week to week. I can remove this. I like to go from week to week. And guys, this is not even me going into um key levels and all those nice things. It's literally not me going into key levels. Okay. So I want to draw one from the bottom, but I also want to draw one from the top. So I want to draw one. So why don't I draw it on this point? Somebody would obviously ask me, why don't you go on this point, man? If I know I wanted to go hit that level there, let me draw in a guideline of where I want it to go. Because I know this here needs to come somewhere up there. Okay. So that's within guidance. Right? So now I know if the market breaks on this side of the trend line, 9 out of 10, we're going to buy to the upside. If it holds here, it's more or less going to come back to the downside. And that's just a guidance. Okay. We know we're looking for buys. And let's go. We wanted to either go to the upside. We're literally looking for guidance. Okay. So here's a nice and easy point. A lot of people lost a shitload of money. Why? Why? They sold was this thing they were saying to themselves. And a friend of mine, I'm telling him all the time, buy, buy, buy. He's selling, he's selling, he's selling. He's 100K, 200, 300 down. And I'm saying buy. He's wanting to buy because the market is high. Okay. Here is a perfect example. There's an order block there. And we know if the order block gets broken, this is a daily time frame, market will come back and give what? A breaker block retest, and so it carries on. Okay. So now we have our guidance of our trend line and it's broken. So 9 out of 10, candle closes above. When candle closes above a trend line, the market is likely to sit on the back of it, pull back, and give a continuation and buy the market. And that's as simple as how I continuously quote the trade. But I took it a bit extra, guys. I took it a bit extra because I wanted to know where the market's going to sell. So if you guys look at my Friday post, you guys should actually follow us on Instagram because I want to educate them more because on Telegram, there's too many noise there. On Instagram, I can literally post and people can just go and read it. So on Instagram on Friday, I told a friend before I posted, Nasdaq is going to sell. Okay. Nasdaq is going to sell. So because of old past and all that good stuff, I knew Nasdaq was going to sell. But now, this is how I knew Nasdaq was going to sell. And students, go look at the media video. I'm not going to go into detail of this, but this is how I knew Nasdaq was going to turn, where it was going to turn. Okay. I'm going to go into detail about this baby here. I'm going to go into too much detail here about my baby over here. Okay. Put off. I'm going to make it 2. Okay. So this is a tool. If you've been trading Nasdaq when Nasdaq was in a buyer's market, this would be your favorite tool. This is a tool where you can literally know where the market's going to go and where the market's going to react off. So before we get to a small explanation of that, if this is a key level, this is a weekly key level, and the market comes to this weekly key level. Bevan knows, I don't know if he's on the call here, he just trades key levels. He goes in and clicks a sell, full margin on his account. He'll take 1,000 Rand, sometimes even a 500 Rand. he'll take it to 20,000 because he clicks. And the moment that thing comes, he just click red, blue, and then that thing will give a reaction. And that's enough to give him a lot of money. So here's a tip, guys. Whenever the market comes to a price or a key level for the very first time in a long time, markets going to react. That's where you can make a lot of money. Guys, don't know, since Friday, I've been holding a sell because I believed in the sell because I believe through my back testing what I'm explaining here, the market does that continuously. Okay. So this is a FIB fan. This is a FIB fan. Let me see who's saying is hold on. The wick overlaps the trend line. From the Instagram, bro. Okay. Sorry, just read there. So guys, this is called a FIB fan. It's a FIB fan. Through all the courses that I've paid a guy a lot of money. He taught me a whole course, taught me everything. The only thing I took from his course that I paid 30K for was this, the only thing. And it's always stuck to me. So yeah. So what does this tool do? This tool literally tells you where the market's likely to go and where the market will react off. And if the market breaks above this level, the market will continue buying. Okay. So this is literally utilized as a trend line that you cannot see, but you need to find the correct point, the high, and you need to find the low, and you will know exactly where the market's likely to turn. Okay, I can backtest the shit out of this, all these moves. But yeah, this is the public call. This is not to go into depth. But guys, don't sleep on this tool. Utilize it. It's called a FIB fan. Okay. So I knew the market's gonna go here and it was going to react off this level. So let's see. But okay, my trading plan is still there because I don't know why. I'm on the daily time frame. It's the higher the time frame. Okay. So guys, we know what is this? We know the market broke above. We go on the 4-hour. We know the market broke above. A lot of the smart money traders is looking for buys here. Me, I click a buy there. I click a buy there. Why? Because follow retail first before you follow smart money. Follow retail first before you follow fair value gap. Know how to utilize this fair value gaps that people's been teaching you correctly. I say that with the utmost respect. You guys, some of you guys know knowledge, but you don't know how to utilize it properly. Why? Because you don't want to find that utilizing a retail method to seeing and spotting directions, you just want to have quiet charts. Me, I'm not about quiet charts. I'm about making the money. I want to make money. Trading is not about looking quiet. You will hear my. Anyway, so market breaks. Market is likely to turn within this area. Again, if you want to go on the trend line and click the buy, it's a risky because we don't buy because it's a trend line, but we buy in the zone. Candle closure and all those good things. And yeah, let's see. Let's go. Let's go. So let's go. I think I bought, yeah, I don't know why. Oh yeah, I was busy on the chart. Sorry, guys. So yeah, we bring smart money in. Wonderful. So yeah, what has happened? Market has broken structure. Yeah, you can even go as far to do this. To draw another guidance. Yeah. Sorry. You can draw another guideline here. Market has broken structure. If it breaks above, we buy. If it comes back here, we buy. If it breaks below, we take a loss, we sell. Is that easy enough, guys? Does this make sense? Just listen here. If this has to break here, we buy. If it comes here with smart money, we buy. If we take a loss, what do? We change direction. We don't get married to the trade. It's that simple. That simple. You guys with me? Who's saying really a lot there? Let's see. Is it too much, guys? I'm just reading the comments here. Yes, just follow the trend until okay. So, guys, you selling here? I'm not selling. I'm waiting for the buys because the market is telling me direction is buy. So you taking a buy here, you taking a sell, you taking a loss, you taking a win. Me, I'm taking a buy. I'm winning. I'm not taking a sell. Me, I'm taking a buy. I'm winning. Me, I'm taking a buy. I'm winning. I don't. They haven't taken a loss in the past 3 weeks. I think. I took a small loss, but that was me playing around. So I'm following the rules. I'm on the right side of the trend, and I continue doing what I need to do. So I know if the market comes down here, I'm buying. If the market is doing its thing here in the middle, I'm not buying. I'm not selling. I want to be above resistance. Remember, this acts as a level of resistance, and this acts as a level of support. Okay, so we know here, guys, here's smart money here. Market is broken structure to the upside. It's either we buy here or we buy there. So let's see. So now where the market is, no sell, no sell. We're waiting, we're waiting. Market is coming down. I'm not selling. I'm not losing money today. Boom. What am I doing? I'm buying the market here. Smart money is coming to play. Drop down to 15 minutes. I think this is the one that gave an inverse. The inverse. I still put this on Instagram as well. This gave the inverse. Let me do it here. This was a stupid trade. So we know this is smart money here. But again, market has done a big fall here. We're not just going to click a buy and lose unnecessarily money. We want to first see a change of structure here. This was also on the news where the market went. Yeah, so this was the inverse. Oh, here's the marks here. Sorry, guys. Here's the marks that I was working on. And again, this is the lower time frame. So we're not selling because it's under the trend line. No, we know on the higher time frame, this is on our level. Here's smart money here. Boom. Broken structure to the upside is an inverse head and shoulder. We still want to buy the market. Yeah, I bought the market. Here was the smart money here. And market continued going up. Let me go on the 1 hour, 4 hour. Let's go on the 4 hour, guys. Get it stop now. So, boom. Guys, is this informative? Are you guys understanding? Seeing how to move, when, how, and why, and a stupid easy stuff. Yeah. This one here, I bought here. Now I bought here. I came down. I knew this candle had to hold here. I bought on the trend line, boom, came back in red. I wanted to hold there. There's where I wanted to hold. Because I knew this on a higher time frame. That's the 88.6. Market had to go hit that trend line. Boom. Okay. So here's where it got interesting. So when you pull this, on the weekly, when you pull your foot fan, guys, here's a thing. You need to pull it accurately. You need to pull it accurately. If you're not gonna pull it accurately, you are going to lose money. Okay. So here in this case here, we're on the 1 hour time frame because I love the 1 hour. We never hit it. So this was when? I think this was the Friday. Yeah, this was the morning. I was still pushing to the upside, and I'm like, the sell's not ready because we never hit this level here. If we had to break out and close above, I would have continued buying. Okay. But I can show you guys why I never just sold. Because the market is bullish as fuck. You don't just want to sell. Okay. So here is where the whole plan came to place. Here's where the whole plan came to place. We never hit the out of the trend line. We hit it. We got a big reaction immediately off it. Bearish engulfing. Market came back for a pullback. Here was a 15-minute order block. So I made my entry a little bit lower just in case I did not pull to the upside. Went into some drawdown. Nothing major, nothing to panic about. And guess what? Stop loss above. If the stop loss had to be for this stop loss for this case, I knew if it had to come back up here and it's gonna break, let me just get out of the trade and call it a loss. Okay. So I went with my rules. Smart money was here, structure broke on the lower time frame. Here's the entry. And I think I closed my trade here on this line today. I think I said on Instagram, guys, I'm closing the one account. And then my other account eventually hit the TP here and market reversed immediately. So let's see. We play. And this trade out for 3 days. I'm going to let it play out completely. A lot of people lost money here because they will keep on buying. But again, every day is not a trading day. I had this trade since last week Friday. And what's it today? Tuesday. And TP only hit. So market came and reversed immediately. And where was that? I think this is on a monthly or weekly key level. But my TP was there. But on my MT4, my TP was here. I don't know if you guys can go look there on Instagram. I said TP hit, and exactly where the TP hit, the market turned around. Guys, that's exactly how I caught this whole buy. Why I continued buying, why I continually said don't sell. For me, I can take a quick sell here with a small account, but I'm holding buys on the other account. So if I'm taking a loss on one account, am I really losing? For example, if I'm taking a loss of 1,000 Rand, but I'm holding a buy of 10,000 Rand, what is losing 1,000 Rand? And a lot of people want to do this. They want to make money. They're not willing to lose money, but they're just willing to be in a trade constantly over and over again. Whereas me, I choose my trades wisely. Every day is not a trading day. And again, if I do take a loss, a tricky loss, I can do it because I have the money to replace my account if it blows. Does that make sense, guys? Again, it's just following rules. It's literally just following rules, guys. Literally following rules.